Yo, yo, yo. This is actually my third time trying to record this video, so I'm just going to cut straight to the point. Thank you for coming and checking out the channel. I appreciate all you guys for coming and hanging out here with me. So let's zoom in. This is the AMC chart, obviously. Long term bull trend, long term, where we basically this channel that we've been trading in, where we have tops and bottoms. Um, let's zoom right in here and talk about this next potential bear trap, which I'm going to call the bear trap 2.0 that could be forming here on the chart. This is a falling wedge, which is a bullish reversal pattern. So typically, the way that this trades is you measure from the top to the bottom of the wedge at the initial point, and then you drag that to the breakout point, right? The crazy thing about this is if this pattern actually ends up playing out, then it could potentially bring us, if we get enough momentum, and we can measure here. It could pull us back up above $50, almost at $53 here. And that would carry us up above the bull trend again, potentially. But who knows what happens when you cross back over this $50 line. Um, we I mean, look, bears are getting euphoric at this level again. By the way, this is what is it? 2 out of the last 3 days, maybe. Oh, actually, no. Yesterday was when the euphoria started, when they first broke the bull trend. I think it's actually something more like this. Um, and then basically, they got this close, which was the first close that I have below the bull trend. That's the only reason I need to switch the line to here. And then now you have more downside, which isn't that surprising. But this falling wedge is actually uh, less less and less interesting price action to the bottom, and we've actually formed here a higher low for the first time, right? Since this recent bearish move that we've been in. Sorry, I'm just going to clean up the chart a little bit here. So, first of all, let's just talk technically, and I do want to talk about some of the fundamental stuff or market making stuff or DD stuff that a lot of people talk about. They talk about options chain, things of that nature. But let's just talk about the technical implications. Let's talk about the emotions that happen and how it matches up with what's going on in the chart, right? If you have and I use Elliott wave sometimes, especially in moments like this when I'm trying to determine where we're at from a price standpoint and where we could be going, right? Because most price movements operate uh, in Elliott wave theory. They end up working that way. And if you follow me on Twitter, that's how I actually make a lot of my calls, and I can see when price is going to start going back down, when price is going to start going back up. It's usually based on Elliott wave theory. So snap. Let's see. Let me get. Well, I can just use the path tool because I chart on my phone all the time, so I don't know how to operate the computer. Here, we got Elliott waves here. Boom. All right. So what we have here is wave one, wave two, an aggressive wave three. Wave three is normally the most aggressive wave. Wave four down and a wave five. That's how I count it, at least. And so what you get after that is a corrective wave. And a corrective wave can be measured using Fibonacci retracement, which I'll show you a cool way to use that as well. So you measure from the top to the bottom, and then you get your Fibonacci levels. The most significant Fibonacci level is the 0.618. That's the golden ratio. This is where most corrections end up happening, or at least settling down, or that's where you find. And ironically, here you can see it matches up perfectly with the top of wave one. In this, what I think is a wave one in itself. So, if you're not familiar with Elliott wave, these moves are sorry. These moves are actually measured, so they're waves within waves, right? So you have a larger wave one, and then potentially a wave two, and then a wave three. I'll just cut the rest of it off. Four and then five in the same fashion. That's typically how Elliott wave works, and it uses Fibonacci to, you can use Fibonacci alongside it to determine where these levels may be. Um, yeah, so that's basically what I'm looking at from a short term perspective. From a bullish standpoint, is you have this reversal pattern that could be playing out. It works out here with the 0.382 Fibonacci level. We're sitting right on it, and I do want to kind of let you know that this pattern to me isn't necessarily invalidated until we see some large closes below. Why is this not working? The Why is my measurement so far off? Oh, you know what? Because I probably did it with daily first, huh? Yeah, so something like that. And these are, I mean, relatively loosely drawn because it's more about the emotion. It's not about lines on a chart as much as it is what the lines represent from an emotional standpoint. But what I would say is, and let me put the fib back on here to set some expectations as far as like what that would look like. Just draw it roughly here. Not a big deal. Again, these are regions, right? I'm not going to tell you the penny that it's going to hit or anything like that, but these are just general regions where you're going to see the trading happening, right? You're going to see, look, I mean, you can see here along the way up, it's respecting these boundaries, right? Turn around close to the point 0.5. You get some chop here. You turn around, get some chop here. And how is that even possible, right? Well, the Fibonacci sequence works throughout the chart. And I'll show you a big example towards the end, but let's get to it here, right? So what you have here in your corrective wave, to me, is you have an A, B, and then you could see a C, right? And this would break. A lot of people would say, "Oh, this breaks your pattern," but you have to realize that there are other forces at hand here. You have market makers, you have things of that nature that are playing into this and use these tools as well. Traders use these tools. Hedge funds usually use these tools. So if I'm a hedge fund and I want to beat up on my hedge fund friends, right? That are looking at these larger bearish signals, right? Like maybe there's a bear. There are bears out there that are looking at this as a descending triangle, right? Maybe there are people who are looking at uh, this potential. Oh, look, this is a good one. A head and shoulders, right? You'd see boom, and then you could see boom, something like that, or maybe even you know shoulder. Your shoulder probably actually is here, huh? Yeah, it levels out. Oh wow, yeah, we could get a big drop back down to the $30 level, right? And then we close our shorts. We're rich. What I'll say is this reversal pattern that's forming right here is one of those moments where a hedge fund could say, okay, look, we want to trap a bunch of bears. So what we're gonna do is we're gonna short this thing, and we'll talk about the economics behind that as well, because there are a lot of shares available to short. We'll short this thing down, right? And then we find one of those fib levels, and then we're just gonna close our shorts, which is gonna cause the price to go up, and then we're gonna go long, which will cause the price to go up even more aggressively. And again, what did we say about the measurement? What I'm saying here is a $50 plus, right? If we break a higher high on this, what is this high? If we break above this level, this 53-ish level, right? And we break back into this long-term bullish trend that's been going on for months, almost the entire year, right? It started in January 5th, way back here. We break back into this. I'm telling you right now, the emotions will be at an insane level. And also the motivation for market makers, the amount of money that market makers could potentially make on the flip side of this while calls are getting destroyed in value. And they know what kind of interest retail has in this thing, and how retail is gonna most likely enter I mean, not to be offensive or anything, but like most likely enter some pretty irresponsible positions as a result of this break back up, and what this represents and what it looks like, right? When you look at the price history of AMC more recently, what it implies is these call options up to 145 ish. Oh man, up to this 145 ish level, they are as cheap as can be right now, and and they can get even cheaper. And the amount of money, the percent gain that they can make on this, right, is insane. Now let's talk about the economics too. I'm getting a little bit ahead of myself. Sorry, I'm starting to get excited. That doesn't happen to me very often. It happened to me today when I found this wedge, though. I'm not gonna lie. Um, so the economics, right? A lot of bears. What I have in my Twitter feed, what people are replying to me with is they say there's a lot of shares to borrow. There's like millions of shares to borrow, 3 or 4 million. And I say on this channel, and I've said a bunch of times on Twitter, that I don't pay attention to anything fundamental. I don't pay attention to the market side, what's going on there. I only pay attention to the technicals. I only pay attention to the chart, because I think that the chart actually takes care of all of that. It includes all of that because it includes price action, which includes emotion, which is the most important part. It's all about when people decide to buy and when they decide to sell. That's what causes price action, right? So if you look at it from a market perspective, though, all these shares to borrow, and what I've already said is a potentially euphoric state for bears, right? Which, by the way, like, euphoria is so silly because because calling the stock bearish after it's gone up thousands of percent on the year, and then also just in the past few weeks has gone up. There I go again, not knowing how to use my computer chart. Has upwards of 80%, and then like a 15% correction, right? And bears are like, oh yeah, we win. We've won. I got bears sending me rocket emojis on Twitter and stuff, which is fine, by the way. It's nothing wrong with being a bear. I just think that your thesis is a little bit weaker than a bull's, from a technical standpoint. Um, all these shares to borrow all of a sudden, right? Millions of shares to borrow all of a sudden, and they're cheap to borrow too. Wow, man, they're about to come and they're going to short this thing to the ground. It's going to short it. I don't know. They don't say zero because that's silly, but they're going to short it. Oh, apes are going to get destroyed, right? That's the narrative. But you have to realize that is happening because of bearish euphoria, and they are trying to make money. That's all they care about, is making money, right? Market makers. They're collecting put premium, right? This setup, what happens when all of a sudden a whale goes long at a key level? We break back above this trend line, and it looks like, in fact, what I said it would be, which is a wave 3 up. What do you think market makers do then? They say, oh no, well, these calls are going into the money. We're going to need money. I mean, we're going to need shares in order to fill these calls that go into the money, right? So what happens to all those shares that used to be available to borrow? They disappear. They're not there anymore. And all of a sudden, bears start to go, oh no, we broke above this key level, the trend line. We're back into the bullish trend. The shares to borrow has gone down. I need to cover, right? I need to get out of my position that I entered up here. I was so profitable, and now I've lost all that profit because I was being greedy. And that's what happens in euphoria. You get greedy. When you get greedy, you look over things like this. So again, oh, and I want to show you this trick with the Fibonacci sequence. Yeah, this video is much better than the last one. You guys wouldn't have liked the last one. Just kidding. You probably, no, you wouldn't have liked it. You measure from the bottom to the top of this move. You see this 0.618? This is strong support. This is where the stock leveled out. Obviously, in January, that's when the buy button got turned off and everything. And by the way, we still found We still found support at the 0.786 even with all that. If you measure it from the beginning to the run in June, the top of the run in June, you see here as well 0.618, 29.27. If you think that the Fibonacci sequence or technical analysis doesn't work on this play, I mean, this is not like it's not like post measured. This is pre measured stuff. Even crazier on the flip side of that, if you do a extension, and this is what I'll close out with, fib extension from the bottom to the top. I'm just roughly drawing it to the bottom of the move in January. Where did it stop in June? What happened? What is this? $72.48. How close is that to the actual high? Is it the actual high? Oh, well, if you're curious about that and what that implies about what could happen if we see more upside in the situation perhaps that we could be going into, and we won't do it from that long of a time. We'll do it from the bottom of the move here. Here are your levels. So what I'll tell you is, are you more interested in a stock that when you're trading this stock, are you more interested in the long thesis? Right? Look at the trend, at what it's done. And again, all trends end. That's the truth. There's no guaranteed trade, right? But what's the more compelling thesis? Where's the money to be made? Right? Look at this level that we're settling at here. 0.236. Isn't that something? The golden ratio for this extension. Doesn't that align pretty good with the call options that I was talking about earlier, the top, the 145s? I don't know if I said that in this video, to be honest with you. But yeah, so I'll say that my leaning here, and again, I could be totally wrong, and this thing could continue to retrace, but that's just my bias. I'm bullish on the stock. I bought it back here in April, and I see more upside. And I think that my argument is convincing. So that's pretty much all I got. I appreciate you guys for sticking around. I know this video is a little bit longer, and I talked for a little while, but I just wanted to get all my thoughts out there. I had a little notepad here that I was looking at throughout the video to try and keep me on track, but I like to babble a little bit. So I hope you enjoyed the video. And with that, turn on post noties, share on Twitter or something, tell people about it. And other than that, thank you so much for your support, and I'll talk to you guys later. Have a good weekend. Bye.